Welcome to the Daily Brief. This is being prepared Thursday, October 13th, where I'll go over the highlights in the market and then we'll see how things look in a highlight sort of fashion for Friday, October 14th. And we saw a really crazy day where right at the open, we ended up really gapping lower. There was a big gap. In fact, because Wednesday's range was so narrow, that made Thursday's range really narrow. And so we immediately went down to S3, which I had to put that on the chart myself. And that was at 35.17. We even fell below that and we broke down to 3,500. We actually went a little bit below that. And then we saw just massive support coming in because that was a 50% retracement from the COVID low to the all-time high. And once we got to that level, that was considered solid support and the market was able to bounce up off of that. So prices did rebound after finding support and actually went back positive. We climbed to almost R4, which was at 36.90, not quite to that level. We did close a bit off the high. We were up 2.6% on above average volume. We're still negative with our technicals, but with this nice little bounce that we saw, they are showing some improvement, but we're going to have to see some sustainability here. Can we see follow through? Because the markets are still really fixated on inflation and interest rates. There's things going on in the UK again, which ended up being positive and gave some support to the US market. And then any Fed speak that may be coming out that we haven't really heard, at least today. So the CPI, it came out and it came in hot. It was much higher than expected. It was pretty much double with the headline value, and it was greater than expected with the core CPI. And that's what we really look at to gauge inflation. When we were down, the S&P was down 2.4%, and then it rebounded off of that 50% long-term fib level retracement. And then there was a report that came out that said that the prime minister in the UK might scale back their stimulus plan, which is basically quantitative easing. This gave some relief to their bond market, which they call gilts, and it gave some support to the British pound. And the 10-year gilt yield fell 33 basis points to 4.19%. An interesting thing about Thursday's upward move is value outperformed growth. Now, the other times we've seen bounces that fizzled out, it was growth having a tendency to lead things higher. Does this mean anything different? We don't know yet. We'll have to evaluate that. We still have a number of the yield curves that I follow that are inverted, and sentiment, even though it did improve, is still showing extreme fear. So the total CPI rose 0.4%. They expected it to be up 0.2%. And then the core, which excludes food and energy, it was up 0.6, where they expected it to be up 0.4. Then on a year-over-year basis, the CPI was up 8.2%. Last time we had this reading, it was 8.3. The core, it now is at 6.6%, where the last time we got this report, it was at 6.3. Jobless claims came in not a lot different than what was expected, a little bit more than were expected, but these numbers have been really off from each other. So 228,000 versus 225,000. Our trend is still negative, and the ADX is still having a tendency to go up. So it's getting stronger, and we're above 20. The bias, that I probably should have changed that to positive. I just get leery of these one-day wonders. Even though the bias is usually just one day, it'd be nice to see some follow-through. And I'm still keeping our momentum at negative because that's what we've been doing for the last 2, 3, 4, 5 days. So what's our outlook then? The technicals, they're still negative, but improving, especially if we see follow-through. Are we just working off an oversold condition and then gonna start going back down? Or is this the beginning of some kind of a significant rebound? We have retail sales coming out, import-export prices, and business inventories, and I believe consumer sentiment will be coming out. The whole list of geopolitical events, and with inflation and interest rates really leading the way as far as the stock market is concerned. Our scenarios, we still have to go with the down scenarios because our technicals are still negative, but they could be improving. So you don't really want to jump in that if this is some kind of a significant bounce. We can't really go up yet because we're not really seeing a lot of confirmation at this point, and you really don't want to go sideways because the ADX is still strengthening and it's above 20 and the red line's on top, so it is negative. So our conclusion, the S&P, it's still negative, but might be rebounding. If we can get this to last more than just one day, we might be rebounding in the short term, intermediate term, but we're still negative in the long term. So thank you. Please feel free to check out the full length video. I show charts and give a lot more explanation to things. And I will be preparing the weekly video and the intermarket analysis video, as well as the daily video over the weekend.